Hey everyone, today we're diving into Tesla's latest earnings report, which came out today, October 23rd. And despite a small revenue miss, there's plenty of good news. Stick around as we break down the numbers, Musk's bold predictions, and what this means for the future of Tesla stock. First, let's talk about the core numbers. Tesla posted strong earnings this quarter, even though they came up just short of revenue expectations. Here's the breakdown. Earnings per share, EPS. Tesla posted 72 cents per share, beating the forecast of 60 cents. Revenue, Tesla brought in 25.18 billion, just under the expected 25.37 billion, but this is still an 8% increase from the 23.35 billion in the same quarter last year. Net income, Tesla's profit climbed to 2.17 billion, compared to 1.85 billion last year. So, despite slightly missing revenue, the company showed strong profitability with an operating profit margin of 10.8%, which is up 3.2% year over year. That's a great sign of Tesla's ability to stay efficient even as it scales. Where did Tesla see its growth in revenue? It wasn't just from selling cars. Vehicle sales did increase, but they were under expectations. Tesla's battery storage business grew significantly, contributing to the strong earnings performance. Energy storage deployments hit 3.9 gigawatt hours, almost 100% growth year over year. Other businesses, such as supercharger network and vehicle service programs, grew to 1.87 billion, up from 1.64 billion last year. This diverse set of revenue streams is helping Tesla stabilize its growth and reduce reliance on just vehicle sales. Looking ahead, Elon Musk made some bold predictions for 2025. He said that Tesla expects a 20% to 30% increase in vehicle sales next year. To put that in numbers, a 30% increase would mean selling 2.3 million cars in 2025. Wall Street is only expecting about 2 million, so if Tesla hits Musk's upper limit, the stocks could rise sharply. The key to hitting these targets will be Tesla's production ramp. The Giga Berlin and Giga Texas factories are now at higher capacity, and with plans for future expansion, Tesla could scale up production to meet the demand. Now, onto one of the most exciting updates, Tesla's FSD technology. Musk stated by Q2 of next year, Tesla's cars could be safer than human drivers. If that's true, it would be a huge leap forward for Tesla's plans to roll out robo-taxi services. Musk mentioned Tesla plans to launch a driverless ride hailing service by the end of 2025 in California and Texas. This would make Tesla one of the first companies to deploy fully autonomous vehicles for commercial use. The future of autonomous driving could revolutionize not just Tesla, but the entire transportation industry. If Musk's vision holds, this could be a major revenue stream alongside automotive sales and energy storage for Tesla. Another important detail to consider is Tesla's profit margins. Despite some pricing pressure and an aggressive push for affordability, Tesla still maintained strong margins. The automotive gross margin for this quarter was around 17.9%, down slightly due to increased cost. But Tesla's strategy to cut costs at its gigafactories seems to be paying off. Looking at the bigger picture, Tesla's ability to hold a 10.8% operating margin shows that even as they increase vehicle production and lower prices, they're keeping profitability strong. This is something investors will be watching closely as the company scales up. Now, let's talk about what these earnings mean for Tesla's stock price moving forward. Despite the small revenue miss, the overall picture for Tesla is positive. Here's why. Beating on earnings per share. Tesla's adjusted earnings per share came in at 72 cents, much higher than the expected. This earnings surprise typically boosts investor confidence and can lead to short term stock price gains as it reflects strong profitability. Revenue growth. Even though revenue was slightly below estimates, the 8% year over year growth is still solid, especially when compared to many competitors in the EV space who are struggling with profitability. This indicates that Tesla is continuing to expand and diversify its business, which is great for long term investors. Strong margins. Tesla's operating profit margin of 10.8% is a key factor to watch. Maintaining strong profitability despite rising production costs shows the company's ability to execute efficiently, and this is a big deal for Wall Street. If Tesla can keep its margins healthy, investors will likely remain bullish on the stock. Projections. Elon Musk's ambitious prediction of 20 to 30% vehicle sales growth in 2025 has major implications. Wall Street, as I mentioned, Wall Street is looking at 2 million vehicle deliveries for 2025, but if Tesla hits that upper range for Musk's forecasts, that could significantly boost the stock. A faster than expected growth rate could lead to a reassessment of Tesla's future earnings potential, causing analysts to raise their price target. Autonomous driving and robotaxis. The robotaxi and FSD technology announcements are key long term growth drivers. If Tesla can demonstrate that its FSD system is truly safer than humans by mid 2025, it will open up entirely new revenue streams through its planned robotaxi service by 2025. This could create a new narrative around Tesla that it's not just an EV company, but a tech leader in autonomous transport, which would significantly raise the valuation. As of now, Tesla's growth outlook and potential for technological advancements could result in long term stock price gains for investors. In short, Tesla's latest earnings report offers a lot for investors to digest. The strong earnings per share and profitability are likely to keep long term investors optimistic. However, the real upside for Tesla stock lies in how well the company can deliver on its vehicle sales growth and self driving ambitions, such as the robotaxi initiative, over the next few years. If they hit their targets that Musk has proposed, we could see a significant boost in the stock price as Tesla proves it can continue scaling and innovating. Thank you for listening. And if you found this breakdown helpful, make sure to hit that like button and subscribe for more updates on the stock market.